All right, welcome everyone. Welcome to this episode of Budget Ki Baat. I have with me Mr. Ruchit Mehta of SBI Mutual Funds, and this is going to be a very interesting session. Lots to unwrap in this session. I'll get right to the meat of it once again. Sir, do you think this budget prioritizes boosting consumption over capex while maintaining fiscal prudence? I think these I've covered pretty much the three big keywords that are in everybody's minds. And do you think this approach will drive sustained economic growth? Does it make you happy?
So, I think budgets incrementally have stopped becoming more sort of material drivers of economic activity, right? They are kind of an indication of what the government intends to do. And I think there's a lot of other events or activities done by the government with regards to outside of the budget ambit itself, right? Having said that, I think this one was a very good budget from the standpoint that there was some bit of shift back towards encouraging consumption that's there. So, from a consumption standpoint, this was a pretty good budget. Giving 1 lakh crores back to the consumers is not a small amount of money, and we think it can spur consumption going forward. That's there. From a capex standpoint, yes, one can say that there is a bit of a disappointment that the capex numbers are not as great as one would have thought of. But given the constraints that you have, right, which is that you're working with a 10% nominal growth, you have to get the fiscal consolidation continuing, and you need to give a boost to consumption. So there was only limited space that is available for capex. So from that standpoint, to see the kind of capex budgeted, I think it's also still a pretty good number. I think a bigger challenge for us is not really in allocating more money, right? It is in getting projects executed on time, on schedule, on quality.
Right. How about the fiscal deficit numbers? We have pegged our numbers at 4.8% this year and then targeting 4.4% next year. What do you think about that?
So 4.4 was a bit on the positive side in terms of what they have targeted. There is some risk that it can slip a little bit, and particularly because there is always an assumption with regards to divestment that's there, right? And divestment tends to be a fairly uncertain number per se. Wide range of question marks on whether there are outright buyers or market conditions, etc. So that is something that one can kind of be a bit doubtful of. Obviously, there will always be a small movement here and there in regards to whether it's tax collection or security transaction costs, etc. So a variety of things could move the numbers here and there. But I think from a directional standpoint, the government's intention is to continue the glide path towards consolidation. 4.4 becoming 4.5, I don't think it'll be a material problem for the markets.
Right. So this capex versus consumption story, do you think this is a pivotal moment where we are moving more towards a free market dynamics model?
I would not call it out as saying that this is a material pivotal moment in that sense. I think the government's intentions remain clearly at two levels, right? One is that you have to spend more and more towards the capital expenditure part of it. So if you look at even the broader government expenditure trends in the past 10 odd years, right? The growth rate in non-capital expenditure items has been much lower than the nominal growth in the GDP. So there has been a de-emphasis by the government on basic revenue expenses per se, which may not necessarily be long-term value drivers for the economy, right? So their focus has solidly been on capex. I think in some senses, this year was more of a bit of a pause in that. You needed to do something for the middle class, which has been impacted by high inflation, high cost of living, and also the fact that many of the tax deduction that under the old regime that used to be there, right? They haven't really changed for a long period of time. Like, for example, your standard deduction that came on housing loans, right? It was 2 lakh rupees set way back 10, 12 years back. It hasn't changed. So from a sheer inflation standpoint, some of those deductions could have been materially changed. So in that context, taking the zero income tax bracket up all the way to 12 lakhs is a pretty big booster. And I think people have made assumptions around whether it's 50,000 to 1 lakh rupees, right? Whatever the number you look at, it is not a small amount of money, right? And it can fund a lot of discretionary consumption that can happen. So I would not say this is a material pivotal shift. I think this is more like you're taking a small pause in what is a long-term focus more towards infrastructure investments and saying that okay, do a little bit more for the consumption side of it, boost the economy on that side, and try and give sort of a double effect on that front.
Right, right. This consumption trend, which sectors do you see benefiting the most out of it?
So if you see the income tax cuts that have happened, right, they are targeted more towards those taxpayers that's there, right? So those people who actually are paying tax. So most of these are going to be salaried people. Most of them are either in private sector corporations, services, etc. And from that standpoint, I think the consumption expenditure will be more on, say, the discretionary side of it, right? Let's say if it is the purchase of cars or two-wheelers or white goods, electronics, a little bit could theoretically go into the way of, say, home refurbishment or in terms of buying, even putting down payments toward other purchases that you would have made. There is likely to be some savings as well. So it's not that everybody will spend the entire sums of money, that's it, right? You could pay down existing loans, or you could just save up a little bit more for future. So it increases the budget, right? I mean, like it's like this, the the housewife or the mom in the house has got a bit of extra money. Now, what is she going to spend on, right? So you could choose on different priorities that's there. Some it could be that you are spending on services like coaching classes or tuitions for kids. Some would say we had an old scooter that needs an upgrade, right? And 50,000 rupees average savings, which means that roughly over 2 years you can buy a scooter on your own. With a bit of a loan, you could buy a more expensive product. So we see more of discretionary kind of products seeing a boost in demand conditions because of this.
Right. Do you see these extra savings flowing into equities and mutual funds as well in the coming period?
I See, I think what again, very difficult to gauge where exactly that money will flow, right? So there'll be pockets of everything. So some guy may say, that, look, okay, I've saved 1 lakh extra. Let's say you're a high income earner in the 50 lakh plus bracket. 1 lakh for them could be that purely goes into savings, because for them, their expenditures on certain items may not necessarily have been impacted by whether this. I mean, they would have bought a scooter regardless of what they would have been earning or saving. So they are the guys who potentially could, invest back into savings or financial instruments. But the people are earning, 20 lakhs, 25 lakhs, right? It's quite likely that you could see a mix of both, right? Mix of savings. Now, whether those savings take in the realm of fixed deposits or in terms of equity, I would guess logically it should be more towards equities, because fixed deposit don't make a lot of great return. I mean, post tax, you get 5% or 6% right now. But yeah, I mean, if markets are stable, then you could see some bit of flow. But again, it'll be difficult for us to really judge, what exactly out of that 1 lakh came towards, say, investments and came towards, consumption. But it'll be a mix of things.
Right, right. How about the impact on real estate? Do you think it'll flow there? Of course, I know somewhat you've answered it's difficult to gauge right now. B, is it gonna see more inflation? The real estate prices are gonna inflate even more, given that people have more discretionary budget. And C, the what trend would it have on, let's say, the real estate listed companies that we have? Are they also gonna see an uptick there?
So this is not a material driver for purchase of property per se, right? Because when you think of 1 lakh rupees, it doesn't do much materially, right? I mean, at best, it could mean that you have a purchasing power of, let's say, 1 crore for a property. Now, yes, in some smaller towns, it could be material. Let's say you are based out of, say, Jaipur or Pune or some of the smaller towns, like a crore kind of a number could be material from a real estate purchase standpoint that's there. But in the bigger cities, it's not going to make any dent, right? I mean, Bombay, it's unlikely that you'll be able to buy something in that pocket. So there is some potential in the smaller cities. I think from a real estate sector standpoint, what this could mean is that some bit of things, for example, that people would have put off on, say, okay, this year we don't have the budget for repainting the house, so refurbishing the house that's there, or doing some bit of repairs work. That is I think it's gonna be, if you are in a smaller town, you have the ability to buy real estate a little bit more. It's a more potential for you to buy real estate. In the bigger cities, it's going to be more about that. You have a little bit of extra income, and now you can say that, do I refurbish my house, or do I buy some white goods, like, one AC and I add one more air conditioner this year, or I buy another television stuff. So it's going to be a mix of that. So directionally, I don't think this is a very big driver for real estate. I think it's a bigger driver for, say, automotive, for your white goods sector, your travel and tourism sector per se.
Right. So while we talk about the tax breaks, that addresses more of the urban audience, the middle class audience. We also got a plethora of agricultural schemes, which kind of drive the rural consumption demand.
Yeah.
Which do you think is going to be more impactful from here on?
I think the more interesting ones are the projects that they are initiating with regards to improving the supply chain itself, right? I mean, see, one of the aspects is that the all the women oriented schemes that every state government is announcing, like in Maharashtra, we've had Ladli Behna scheme, Delhi elections, everybody's promising, I think 2,000 something rupees per woman that's there, right? Now that's a small ticket item, money that's being given to everybody, and generally you will see it can go towards daily use consumption products, right? Whether it's to buy the fresh fruits and veggies and stuff, or pulses. Now the problem of there is that you have given a lot of money in the hands of the consumer, but there's no supply. So I think all these schemes that they have announced with regards to easing supply chain challenges are could in the medium term be beneficial if it helps ease up the supply chain bottlenecks, or things like cold storage or better crop yields, etc. So overall, I think those were good sort of initiatives to improve the supply chain on the agri side.
Right, right. Moving beyond the consumption story, we have a lot of other initiatives as well. For instance, the FDI has been increased in the insurance sector. Similarly, we have a Heal in India project wherein medical tourism is being promoted. We also have something for EVs wherein lithium ion battery import duties have been changed. Nuclear energy ke liye bhi there are quite a few projects. So in these projects, which ones do you feel are going to have an impact? Which ones are going to move the needle?
Yeah, I think these are all smaller tinkerings that will eventually sort of. So, for example, if there was a insurance company that was not participating in India insurance market, right, and you earlier had to look for a partner and come to some arrangements and agreements. Now you don't need to. So let's say somebody wants to specialize in a niche part of the insurance market, right? But the Indian partner may deem that it is not a materially large enough market for me to kind of invest capital behind. So you'll find they can open up potential for players to come into the Indian market who earlier were not. So at the margin, this is positive. Is it a big material driver? Not really, because we have a fairly large, thriving domestic insurance market itself per se. So these are all small initiatives that they have kind of taken to sort of, get the sort of economic activity going. It's like the whole aspect about that you need to ease, doing business in the country. So, you're just kind of doing some away with some of these sort of small things that's like, improving the duty structure on lithium ion batteries, right? I mean, it helps. There will be a lot of second hand batteries that come up in the global market. You could have a lot of recycled lithium happen in the country. So, you could set up that India could may not just be a manufacturer of batteries, but also become sort of a recycler of batteries process. So it's at the margin, these are all small things that kind of help ease up one industry the other. The impacts will only happen over a slightly longer period of time.
Right, right. Getting to the capex side of it, some of the key themes that were driving the market in the recent past, at least retailers were flocking to it, were like defense, or let's say the PSU companies. We have PSU banks, we have other capital companies. Do you see any shift in headwinds there?
So I think the headwinds were there last year itself, regardless of the budget, right? I think in some cases the valuation itself made no sense, right? I mean, there was a shipbuilding company with market cap of a lakh crore, right? Now, if you think of it, this is a business that is dependent on the government for contracts, and therefore it is going to be very cyclical, subject to working capital issues, subject to how the government's budget really pans out. And more importantly, how many ships is India going to need as a country, right? How many frigates you need? How many defensive ships do you need? So there's a limited amount that the country needs. At a certain point in time, the demand really kind of goes away. So, and on the flip side, you had asset management companies trading at the similar level of market cap, and those are kind of perpetuity businesses, right? I mean, if you think of if you think of it over the very long term, 20-year time horizons, right, the markets will go up at least by the rate of the nominal GDP. So let's assume 12% is the nominal GDP. The market goes up by 12%. An AMC company, if it just manages to retain its asset base and grow its business by 12%, now it doesn't make sense that one is trading at half the valuation than the other, right? Because there was a fancy for defense and fancy for all this stuff. So I think more than the government budget exercise, I think the headwinds really were the unrealistic expectations with regards to growth and valuation that were there. There has been some bit of correction, but though I think not material enough, I think there's still potential for further, valuation corrections to happen.
Right, right. Moving beyond this budget a little, for the next, let's say, 5 years or a decade, what are some of the key themes that you see emerging in India which retailers should pay attention to?
See, I think consumption will see a bit of a revival, and this is more to do with the fact that, for the last 4 5 years, again, going back to what the government did, you needed to boost, consumption in the hands of the consumer, right? I mean, so over a 5 year period, somebody who is currently getting a 1 lakh rupee tax benefit is going to get a 5 lakh rupee tax benefit over the next 5 odd years, right? And a lot of that is going to get spent out. And there is obviously is a multiplier effect of consumption that happens, right? So you buy a two-wheeler, it creates more demand and therefore more production, etc. You go and stay in a hotel, then obviously there's more demand for that, and so on and so forth. So this is going to drive a little bit of an improvement in consumption-related demand, right? The rural economy was doing well. We've seen improvements that have been happening. All the government initiatives, plus also like food prices globally have been higher. We've had very good sort of monsoons. So a lot of positivity has happened on the rural side of it. So I think next 5 years can be, good from a consumption standpoint per se. I think infrastructure broadly remains from a optimistic outlook standpoint. You have to be careful, what parts of the infrastructure segment you are sort of investing behind, right? And do you buy into, the high expensive names, or you go back to say, the old economy stuff of construction, cement, steel, etc.
Right, right, right. Before we, of course, we talk about opportunities, we have about risks as well. Can you give advice on what should retailers do as to at least avoid avoidable risks?
See, I think one big risk that you will face is that there's going to be a lot of global macro uncertainty, right? I mean, when you think of the kind of moves that are happening on the dollar side of it, the over the weekend, the announcement with regards to tariffs in the US. So there are many of these challenges that are kind of start to emerge on the global macro side of it. So I would be very mindful that this year you will see, or at least for the next few months, you'll see heightened level of volatility as the world adjusts to the new US regime, the new US economic policies, and also how the world is responding, right? What does China do with regards to the tariffs? We've seen that Mexico and Canada have done retaliatory tariffs, etc. So we'll have to see how world growth pans out, and therefore, I mean, there'll be question marks on growth. There'll be question marks that do tariffs lead to spike in U.S. inflation? Therefore, will U.S. interest rates harden, etc. So there's a lot of moving parts around that. The rupee will depreciate. We've already seen 87 already come around their levels. Do we go to 90? And do we need to competitively devalue, given, if every country in the world tries to devalue its currency? So this will be a year of volatility. So one just has to be very focused on the kind of companies that you're investing in. You want to be invested in businesses which are solid franchises and not sort of, high momentum stuff this year.
Right, right. Well, before we conclude, what parting advice would you like to leave our viewers with? It can be related to a key takeaway from this budget or something that they must always remember.
So I would say that, always stay invested into equity markets. Continue to be a passive investor. Don't try and do too much of, trading in and out of markets. India has a fairly long growth opportunity ahead of itself. And if you look at it from a multi-decadal perspective, equities will be your best compounder and, driver of wealth that's there, right? We've seen the kind of CAGR returns people can make over 10, 20 years. So embrace the volatility, be cognizant of it, use it as an opportunity to build your portfolio out there, and yeah, I mean, stay invested for the long term.
Right. Well, that was a time. Thank you so much for taking the time out for us and sharing your insights. I hope you'll allow us to learn more from you in future.
Thank you very much for having me.
Investments in securities market are subject to market risks. Read all related documents carefully before investing.